I'm Emmy.
And I'm Mae.
And this is the Female Founders Rise show. Today, we are going to be talking about why to take angel investment over VC, venture capital funding. Why are we going to have this conversation, Mae? We love this conversation.
We do love this conversation. Well, I was basically rejected by hundreds of VCs. And I ended up raising nearly £1 million just through angel investors.
Amazing.
So I'm very passionate about talking about why, how, and my journey through that.
I think there's a big sort of excitement and belief that VC funding is what it's all about, and it's almost like this tick box that everyone wants to get to, or even people don't actually understand the different kinds of funding available. So 99% venture capital funding is not right for 99% of people. But everyone talks about VC funding and glorifies VC funding. And actually, if you get VC funding, well done. You know, you should be celebrated because it's incredibly hard. But for many people, it's not the right route to go down. So really important topic, really important conversation. Talk to me about the moment you decided you weren't going to take VC funding, or was that actually forced upon you?
Because I got rejected from VCs, but also I think it was the moment when I realized what VC actually is, how they operate, what it means. And I actually think a lot of founders don't understand what that is. So VCs are companies who get money from other companies.
From other investors.
From other investors.
Venture capital firms have what is called LPs that invest in them. So they are investing their LPs' money, not their own money.
Not their own money.
Yeah.
So
whereas angels is different.
Which is, different. But angels, because angels, it's their own personal money. So if you think about venture capital, they are a business in itself. So they have to return their money to investors, and it's often, 10x, 100x, it's a lot of money. Otherwise, they fail. So that's why their processes, who they select, all of that has to be such a specific business. And what I found scary, or I didn't realize, is that for every 10 businesses that VCs invest in, only one of them
will succeed.
And they're backing that one of them will succeed.
Actually, I put some money into a VC fund, and I've seen that. So of the 10 businesses that are in the fund, quite a few have failed. Obviously, that's normal. There's a few that are sort of ticking along, and one of them returned the fund, which I'm very pleased to say was a female founder. Anyway, just very quickly, before we go into why VC wasn't right for you, do you know about Melanie Perkins from Canva, who got rejected from 100 VCs? Before she finally got funding, and now she's got this like multi-billion-pound business. So it does go to show, there's going to be a lot of rejections. You obviously had a lot of rejections, which is normal. But I think for many founders, VC, you're getting rejections because you're not right for that kind of funding.
And that doesn't mean that your business is bad. No. I think that's an important thing.
Exactly. So don't take it personally. If you get rejected by a VC or you get rejected by an angel, that's no sign that your business is a bad thing. In fact, I remember, I'm going a bit off topic here, but an angel who's a friend of mine, he's a very successful businessman. I took him this business idea, this company that I've been consulting for called Act Deodorant, who are amazing, and he said they're never going to, that's not going to be interesting at all. I actually invested with my husband, and now they are absolutely smashing it. They're out in America, they're doing so well, and it just goes to show all investors have different thoughts. Everyone has biases, everyone has beliefs about what they think has worked, and everyone also has passions and things they're interested in. So what might be of interest to one investor might not be of interest to another. So I love that. Don't give up.
Don't give up.
And I think what you said, which is really important, is you realize VC wasn't right for you. You realize angel was right for you, and you've doubled down on that, and you've done £1 million in angel investment. And how long did that take you to do that?
It took a couple of years. So it wasn't all in one round. It took probably over 3 years. But I think, like you said, the difference between angels is that it is their own money. So I was able to build a relationship individually, one-on-one, and kind of convince those angel investors that, my business is right for them.
You convinced me.
I convinced Emmy, who is one of my angel investors. But I think it's a lot more, whereas VCs, again, they have a certain model, they probably follow certain trends, they're talking to each other. And again, 99% of businesses are not right. So for my company, it had a social element to it, it had an impact element to it, and I was able to find the right people who were passionate about what we were building and what we were solving.
And what is that? Just quickly say what Eric is doing.
So yeah, we are a career discovery platform. So supporting young people, 16, 25-year-olds into the creative industries.
And I think that's what interested me, because I used to run a media agency and I've been in media and marketing, and I felt like when you leave school or university, everyone talks about all of the, like, you can go into banking, you can go into finance, you can go into this. They don't, I mean, I never knew that a media agency existed.
And you have 4 kids.
And I've got 4 kids. So exactly. So I'm passionate about opening up the opportunities to young people so that they can understand that. And I think what you did with your angels is you found people who are really aligned with your vision.
That's it, aligned, yeah.
And I think that's the thing about angels. So just quickly, let's go back. So the reasons you take angel over VC is VCs for a very specific type of business.
Yeah.
They're expecting huge returns. There's going to be a massive.
So you need to scale. You need to be able to grow very, very quickly.
Yeah. Angels, we said they're investing their own money.
Yeah.
In the UK, there's tax efficiencies around that with SEIS and EIS. They're probably investing because they either have a passion for what you're doing, they think you're amazing, they have some domain expertise that they think they can help you with. Should we talk about the pros and cons of taking angel investment? Let's talk about the pros first, the pros of angel investment, of taking angel investment as a founder. What have you seen the benefits?
I mean, I think for us, like, our angels really trust us. So there's not like really strict reporting or board meetings or, you know, pressure from them for us to do certain things. Like, they very much know that we're growing at our own pace. So I think that's good. Whereas VCs are probably
there is pressure.
There is
going to be pressure from VCs, yeah. I think the other thing that I found with angels is often they're investing money, but some of them will be domain experts. They will have a lot of experience and a lot of connections, and they're going to be opening doors. And also, hopefully, you being there as a supporter, being there as a champion. Mae, let's talk about the pros and cons of taking angel investment. Let's talk about the pros. Like, what are the good things about having an angel investor?
So the good thing is they are, you know, not as pressurizing, I think. They kind of let you get on. They let you build your business. There's not loads of reporting or, you know, I mean, I'm not saying that all angels are like this, but my ones are very understanding. I have them on WhatsApp. I can give them a ring whenever. So I feel like there's more individual support. And, you know, I can hang out with my investors.
I think one of the things about angels is often they're investing because they've got a real passion, they've got domain expertise, they really do often understand your space, and they can open doors. Like I know one of the other ladies I invested in, she had 60 investors on her cap table, and those investors were introducing her to amazing clients and amazing opportunities and opening doors for her that just otherwise wouldn't have been there. And she actually made that conscious decision that she wanted lots of investors, and she didn't even mind that it was, you know, small investment amounts.
And also, I think, like, at a very early stage business, you're still figuring so much stuff out. And I think angels allow you to have that space to just figure things out.
And hopefully be a cheerleader and a person that can help you. I was on a panel yesterday, and there was an angel on there, and she said, you know, it sounds like she takes calls on a Sunday night, you know, from her founders if something's gone wrong and the tech leads decided to leave or whatever. So there's definitely some amazing angels out there. Of course, there's also super supportive VCs, but I do think it's a different relationship. Angels are investing with their own money.
Yeah.
VCs are investing with their investors' money.
Yeah.
So quite different. And
the cons.
Let's talk about what are the cons. So I would say, you know, and I've taken angel investment as well. I would say the cons are potentially angel investments are much, much smaller. Yeah. So I do know people that are just like, I need £1 million. I don't want to be getting 10 grand off lots of different angels. Think about all the calls that you have to do, all of the relationships that you have to build, all of the reporting you have to do. Actually, if you can just go and get 500 grand off a VC, boom, you're done. And then they're probably going to follow on. They're probably going to come in on the next investment round. Yeah. A lot of angels, for example, I do very small micro investments. I don't have enough money to then invest in the next round. So some angels do, some angels don't. I think that's probably a bit of a con.
Yeah, exactly. And I think that means that you can't maybe grow as quickly as if you had VC money. I think also if you do get VC money, it's often $1 million plus, and it means that you can pay yourself probably quite a good salary. Whereas with angel money, you're still being very cautious on not spending everything and, you know, trying to make that last as long as possible. Whereas VCs want you to grow as quickly as possible so that they can get their money back. So I think, you know, growing a team, scaling, if you know exactly what, you know, if that time is right, then VC money might be right for you.
Yeah. Not easy to get angel or VC, I think.
No.
But one of the things I think with angel investment is they really do, and it's like this actually with VCs and investors. I heard this on the panel yesterday. It is all about the founder.
Yeah.
They are, it's an early stage business. You know, you're probably going to pivot many times like you have, like we all have. So they're investing in the founder and the founder's ability to be able to be resilient and take that business wherever it goes, more so probably than the idea.
Yeah, no, I totally agree. And that's why I think with angel investors, you can show your personality more. You can, you know, when I'm pitching to angel investors, it's not a pitch deck, it's not a presentation. It was actually just coffees, meeting them one-on-one and just having a conversation. So I would definitely recommend like being able to talk about your business in a casual way, and being able to, just like practice talking to your friends and family about it, because it's obvious when someone cannot talk about
friends
that.
and family. So this is something that I have a bit of a problem with. Everyone says, go and get money from your friends and family. The SEIS, your first round of investment, get that from your friends and family. I always remember the guy from London Business School saying the 3 Fs, friends, families and fools, because most businesses go under. So I actually think, first of all, lots of people don't have friends and family with that kind of money. And secondly, personally, and I know lots of people won't agree with this, especially some of the investors, I wouldn't want to put that pressure on my friends and family in that relationship. I think, you know, fine if they want to invest a small amount. I do think in your network, your wider network, you probably do have people that you used to work with, people who used to work with their friends, maybe your friends and families, their friends or their, you know, sisters. But what do you think about getting investment from friends and family, you know, because that is angel. So that, I actually think that's a con if it is your friends and family.
Yeah, I mean, again, I think it's so kind of individual to everyone. We did get some money from friends and family at the very, very, very beginning, because I guess those are the people who are your cheerleader. But I think with angel investment, it's not one basket. You know, you have to kind of try lots of different ways. Like Emmy said, you're getting small amounts, small ticket sizes, but from lots of different people. So it could be friends and family, it could be wider network. So some of the ways that I found angel investors was LinkedIn. This is where I found Emmy. Founder referrals. What else?
Cold outreach. We're going to do a whole episode on this.
We are going to do a whole episode.
Don't spill all the excitement today.
But it's so many different ways, and I think that's what I really want like people to know, is that with angel investment, it is a hustle. Yeah. Whereas with VCs, they have a nice shiny website, you know where to go. There's not that many of them, and you could tick them off a list.
Quite hard to sometimes find angels as well. So let's think about wrapping this up now. What piece of advice would you give to a founder who's thinking, should I take angel over VC?
Learn how VCs work, learn how the model works, learn how they make money, learn the types of businesses that they invest in, because the sooner you realize that you are or you're not, it will just help with your investment and what other kind of alternative funding routes there are. Yeah.
So my piece of advice would be similar to what you're saying, is really educate yourself. I think angels are an amazing opportunity. We're going to do a whole episode on that. But make sure you realize that there's lots of different ways to fund your business. There's not just angels and VC. There's bootstrapping as well. And all of my businesses that were successful, I bootstrapped. So we should do an episode on that as well. So let's just wrap this up and think about the 3 actionable insights. I'm going to share one, which is 99% of founders, whether you're female or male, are not right for VC funding. So remember that, and before you start spraying and praying and sending your decks out to everyone and getting annoyed that these VC funds aren't getting back to you, actually know that 99% of founders aren't right for VC funding. Any other actionable takeaways? I've got a few more.
I'd say, remember angel investors they're investing their own money. So there's a lot more personal attachment to it, which could be a con, but the pro is that you can really try and find investors that align with what you're trying to build, and it's easier to convince people if you find the right type of investor.
And my third one would be that angels bring more than just money. They are opening doors. They've often got domain expertise. They're often part of other angel networks, and they can bring other investors along. They're cheerleaders and they're supporters. So I've absolutely loved doing this episode with you, Mae. I think it's such an important topic.
So important.
You will be able to get the show notes and the playbook in. You'll be able to get the playbook in the show notes, and we look forward to seeing you next week.